It's the first episode in the month of September. We say Happy New Month to you and welcome to Business Morning on Channels Television. I'm Ini John Mekwa.
And I'm Ladi Williams. Let's look at some burning issues now. There has been news that the Nigerian Electricity Regulatory Commission had directed the 11 electricity distribution companies to increase their tariffs from the 1st of September. Being today. Business Morning has reached out to confirm or refute this, but we're yet to get a response. However, we have the General Secretary of the National Union of Electricity Employees, Comrade Joe Ajero, and he joins us now via phone to tell us more. Great to have you on the program. Good morning.
Good morning.
Good morning. Yeah, so some people have described the situation as confusing. Please tell us from your interactions with NERC and the DISCOs, is there a hike in electricity tariff?
Well, thank you very much. What we are seeing now is something we are getting used to. You know, there's usually this kite that is flown most of the time that there will be increase in tariff. And the people, maybe the DISCOs or NERC, in most cases will respond by denying it. But at the end of the day, you will notice that actually there is, increase in tariff. That's exactly what has happened. But you are not going to see it now until the end of September. By the end of September, if there was an adjustment or increase, it will show in your bill. So that is what actually happened. It's not usually with immediate effect, So we're expecting by the month of September. But there were instances where, based on public outcry, they delayed it, but it will surely happen.
Okay, so we're waiting to the to the end of September, but of course there are also those who do the prepaid, so that means you don't even have to wait. But is there any plan by the union? Are you having talks with NERC, with DISCOs? Is there any conversation going on, or is there any plan from your end?
The law says that before such adjustment or increase, they will consult with stakeholders. And what we have noticed in the country is that such has not taken place before. They don't consult with stakeholders. But even when they consult with stakeholders, it's just for their information, not for necessary action. Even if when they say they are going to charge, 100 naira per kilowatt hour, and you say, no, that is high, and they have consulted with you, they will still go ahead and announce that. So the law we are having in place, the NEC we are having in place, is the NEC that is the DISCO's NEC, or the private sector driven NEC. It's not for the workers' NEC. It's not for the masses NEC. And that was why the last intervention and part of the recommendations by the 7-man presidential committee with Labour, insisted on having, workers' representatives in the NEC so that our interests will be protected. So that's what we are seeing. There's no interaction with them. There's no discussion with them. And they are not used to that. They are not used to consultation. It's with fiat that they have been doing their job.
Okay, Mr. Ajero, but in your opinion, how can we resolve this issue of cost-effective tariff?
Come again.
I said, in your opinion, how can we resolve the issue of cost-effective tariff?
Well, the issue of cost-reflective tariff is a model where you have a kind of a conscious sector where you have a plan, that people are scrutinized, because we need to find out what constitutes the cost. If you are done of cost-reflective tariff in the private sector, and cost is determined by the owner of the company, then there will be a problem. You can never get the actual cost. But that's why we're insisting on service-reflective tariff. But even with that service-reflective tariff, it was still the same one that was designed by the owner of the company. So if you are talking of the service reflective tariff that will make more meaning, it will be such that both the buyer and the seller in the market will have input on what should be, the service and what should be the cost. And we can do a hybrid of both cost and service reflective tariffs. We can work on them to get a near perfect system.
All right, Comrade Joe Ajeru, thank you so much for sharing your thoughts with us this morning. I would like to emphasize that we have reached out to the Nigerian Electricity Regulatory Commission. We're yet to get a response also to some members of the distribution companies, there's the DISCOs, and we are yet to get any response from them. And now we have the thoughts of the General Secretary of the Electricity Employees on the proposed hike of electricity tariff.
Yeah. So, are you going to be recharging?
I think some people, I had some conversations yesterday, some people actually
there was a rush
yes, there was a rush yesterday, and I'm hoping this is Nigeria. If they want to hike it, I mean, by the time you're getting it on the last day of the month before the 1st of September, you already have it in there, and there's nothing you can really do. So
the prepared people have stocked up yesterday, those that rushed.
I need to still end anyway.
But at the end of the day,
you still buy
see
more.
If we'll get more.
Exactly. So we'll keep our fingers crossed to see what the situation looks like by the end of September.
Exactly.
Anyway, so we'll move to another conversation now. OPEC Plus is meeting today, and the output for oil is supposed to be released today. And the United States have asked that there be increase in the output, but will OPEC Plus take that or not? We'll discuss with Omoshui Temitokpe, investment strategist with AfriInvest Asset Management. That'll be after the break. Do stay with us. Oh, you're welcome back. Oil prices recovered today after a United States industry report showed crude inventories fell more than expected last week, steadying after overnight losses from the impact of Hurricane Ida on U.S. refineries. Prices rose ahead of the OPEC Plus meeting, which is at 4 p.m. West African time today, where OPEC Plus is expected to stick to a plan to add 400,000 barrels per day each month through December. Brent crude futures for November gained 49 cents to touch $72.12 a barrel, while U.S. West Texas Intermediate crude futures for October was at $69 a barrel, and that's adding 50 cents. U.S. crude stocks fell by 4 million barrels for the week ended the 27th of August. Ahead of the weekly Energy Information Administration report, which is due at 3:30 p.m. West African time today, analysts estimate that crude stocks will drop 3.1 million barrels. A total of 2.3 million barrels per day of refining capacity, which is 13% of U.S. capacity, was shut in Louisiana due to the Hurricane Ida. For some analysis on global oil and the impact on Nigeria, we have Omoshui Temitokpe, investment strategist with AfriInvest Asset Management. Good to have you, Omoshui. Good morning.
Thank you. Good morning.
So we see that the effect of the Hurricane Ida begins to wane. So how does that affect your outlook for global oil at this time?
Oh, thank you for having me once again. So, well, to the impact of the hurricane Ida on oil prices, well, we cannot discount the fact that it actually contributed to the positive sentiment you have seen in the last few days, particularly on Friday, even till now. Although we've seen a slight deceleration in oil prices, but it's still quite strong at $72.1 per barrel. Because as a result of these events, over I think about 2 million barrel have been taken away from the global supply, and that's quite substantial, because even the OPEC, according to the OPEC Plus, according to what they are considering, is just to continue to supply the market with about 400,000 barrel. So over 2 million barrel out of the whole supply, I think is quite positive for the market. Although we are not happy that there are losses in terms of lives, and over 1 million people have been displaced in the Gulf of Mexico as a result of this occurrence. But for the oil market, I think it's quite positive. Although assessing if this is a temporary event or it will last long is not the question that everybody wants to answer, because um, oil refiners are actually used to this situation, and the oil exploration sites, because most of the oil exploration sites at the Gulf of Mexico are offshore. So I think in a way they are prepared for this kind of events. So there won't be a major disruption to their operation and the processes. But the only thing is that we don't know how far the whole hurricane will continue and when it will subside. But once it subsides, I think they'll be able to come back as quick as possible. On the overall, I think oil prices is still quite the outlook for oil price is quite positive, because everything is hinged on economic outlook.
The bulls are back in control, you know, with Brent over $70 at this point.
Sorry, I didn't get that.
I said, is it safe to say the bulls are back in control, you know, with oil, you know, since Brent is above $70 at this point?
Yes. I would have to agree with you that the bulls are back, because, you know, in the first 3 months of August, we saw some major bearish run, and it was due to the resurgence of COVID-19 pandemic, particularly in China. And, you know, at some point, it even led to the closure of some portion of their two busiest ports. And now that you know, the cases are subsiding, and analysts and even investors are assessing that, you know, even despite the data, the impact of the Delta variants, you know, the widespread, it's quite clear that hospitalization and the fatality rate from even all this the COVID-19 is not as grievous, it's not as terrible as what we saw in 2020. So really, I think it's not going to be a major threat to oil prices, and I think the bulls are back. Although we'll continue to see volatility, you know, moves ups and downs, but I still think that oil should hold steady above $70 per barrel at least throughout this year, because everything is hinged on economic outlook. Economic outlook is still quite positive, going by a number of leading indicators from advanced countries. We consider consumer confidence, business confidence in advanced countries, and a lot of other indicators like the PMI as well. So I think on the overall, the bulls are back and the outlook is positive.
All right, OPEC Plus is meeting today at about 4 p.m. West African time. Do you think they will shift their planned 400,000 output increase following the call by the United States?
Well, the U.S. is known for this kind of acts. You know, Donald Trump also did the same thing. He kept calling that the OPEC and OPEC Plus should increase output, and the fear is because, you know, U.S. inflation is quite high, which is likely due to increase in energy price. So, but you know, OPEC Plus will not be so unreasonable to increase output, by not planning it, because most of these countries are not out of the wood yet. A lot of them supported their economy with huge debt. So, in a bid to ensure that the fiscal stance is properly adjusted, you know, they would want to ensure that oil price remain relatively high, so as to, you know, get some money from oil inflows, you know, to adjust some shortfall in their fiscal stance. So they won't just want to increase oil outputs without planning well. Now they need all the money they can get more than ever. Even, for instance, Nigeria, you know, we need all the money we can get from both oil and the non-oil sector. Thank you.
All right, do you think we should expect a pullback in prices post-meeting?
Well, I think, maybe towards before the meeting, but I think oil price should actually stay steady above 72.
Okay.
All right, so what does all this mean for Nigeria? The bullish sentiment, the optimism, the 400,000 more output, and not listening to the United States. What picture does it paint in the Nigerian scenario?
Well, what comes to mind when you talk about the oil markets and the Nigeria economy is the current account balance, foreign trade statistics, and what we are able to get from oil earnings. For instance, you agree with me that even with the MBS data that we saw last week, the GDP figures, what actually dragged the performance was the fact that the oil sector did not do well. And with the trend that we're seeing concerning our foreign reserves, it has been decelerating for about 2-3 weeks now. And you could use that to proxy what is happening to the current account balance. So apparently, if oil price is still quite high and we have OPEC cap, Nigeria might not really benefit from from increasing exports earnings, oil export earnings. The only thing we might continue to see is the struggle and the call for the deregulation of the oil sector, because it's increased landing costs, and that has its pass-through effect on on inflation and a lot of other factors. And I think importantly, how this will affect exchange rate is also of the essence. Although we are still a bit happy because the SDR is coming, and the government is also talking about issuing Eurobond, going to the Eurobond market by October. So really, the impact is going to be from the aspect of the landing cost, but in terms of inflows to the government, I'm not seeing a lot of positive impact there. Because, for instance, budget performance as at May, we saw decline in government revenue from oil by over 50%, while non-oil sector only went down marginally by about 2 to 3%. So really, we might not benefit so much from the rally we are seeing in the oil market as a result of the OPEC cap. In fact, I think it only increased the call for deregulation of the oil sector, because landing cost and the subsidy payment will just continue to increase. In terms of the under recovery will continue to widen, and this will put a lot of strain on government spending. And NNPC, though, is quite interesting now. I think I need to mention that it's quite interesting now that this bill, the PIA, is coming at this particular time. Now that it seems oil is not the game in town, I think investors or Nigeria will now begin to look at the gas space. I think this should be able to help us to cover some shortfall from the oil, because gas, I think a lot of us use it in Nigeria, and I think if the gas reserve or our gas wealth is explored, I think that should be quite beneficial. But from oil, there's not much for us.
Right. All right. We'll have to leave it there now. Moshu Itemi talk about investment strategist, Afri-Invest Asset Management. Thank you for your time on Business Morning.
Thank you.
All right, after the break, AFEX Commodities Market Update is next. Do stay with us. This is Business Morning.
You're welcome back. Well, it's time to review another week ended, and for the week August 24th to 30th, FX Commodity Market Summary Components we're here to see, and Michael Martins, Portfolio Manager of AFEX, has the details of the happenings in the week. Hello, Michael. Good to have you again.
Hi, Ini. Good morning. It's always a pleasure to be here.
Great to have you too. So take us through the week.
Thank you very much, Ini. So it has been a pretty eventful week on the exchange, in the week under consideration. So if you look at the table in front of you, the total value of transactions traded on the exchange went up by a factor of 8, from 0.26 billion naira to close to trading week at 2.37 billion naira. The total number of contracts traded on the exchange also went up significantly by a factor of 129, from 1,127 contracts to close to trading week at over 146,000 contracts. The total number of deals, however, fell by 70%, from 17 deals to close to trading week at 10 deals. The ACI, which is the AFEX Commodities Index, inched up ever so slightly by 0.06%, from 424.62 points to close to trading week at 424.06 0.87 points. The AFEX Export Index, which is the AEI, remained unchanged at 168.08 points. With regards to the volume of contracts traded on the exchange, like I said earlier, there was generally high activity this week in comparison to the previous week, with the biggest changes happening with maize, which traded with 1,077 contracts last week, to trading over 145,000 contracts this week. Other changes were with soybean, which traded 3 contracts last week to trade more than 1,000 contracts this week. And last but certainly not least, we saw paddy rice trade from 2 contracts last week to trading 4 contracts this week. With regards to the price changes on the exchange, there was a general unchange in the prices of commodities on the exchange. We, however, saw changes with the price of soybean, which went up by 11%, gaining 3,683 naira in the contract value to close the trading week at over 37,000 naira per contract. We also saw a slight change in the price of cocoa, which went up by 1.38%, gaining 1,327 naira in the contract value to close the trading week at over 97,000 naira per contract. And last but certainly not least, with regards to prices, we saw maize fall by 3.33%, losing 800 naira in the contract value to close the trading week at just over 23,000 naira. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, and this is ideally the time that you want to start learning about trading the commodities market, you can always download our app, which is available on iOS and Android.
So, Michael, we noticed that maize is a commodity of interest at this time. So we're just wondering, how is the harvest season affecting it? We see a drop in its price and all that. How is the harvest season affecting maize at this time? Of course, it's a multi-purpose commodity. There's so many things that it's being used for, obviously. So it's being drawn, you know, on different sides.
Yeah, thank you very much for that question. I think it's a very important question too, because it more so speaks to our outlook for the new commodity season. And of course, we would be talking about maize being the most liquid commodity on the exchange and even the open market by extension. So when it comes to price reset on the exchange, or even by extension the commodities market at large at harvest, there are a couple of factors that determine what prices will start at harvest period. But the major determinant would ideally be rainfall. And what we have seen this year is the fact that although the rainfall started a bit later than expected, we have seen consistent rainfall week on week, meaning that, you know, rains have been falling week on week for a consistent period of time. And now there are 2 implications for this. So if the rains do stop early enough, what that would mean for farmers who have gone to cultivate maize in the market would essentially be that it would allow them be able to dry the commodities and then enter into the commodities market as and when due, so that the prices can essentially reset when we expect them to, which is ideally around the month of October and also November. But if it is the case that the rains continue for an extended period of time and it takes a while before they stop, it might be the case that the prices would not necessarily reset as expected. So what would happen would be similar to what happened in the year 2019, whereby the rains continued for an extended period of time, and then there was a significant price increase over a 3-week period. That's for the price of maize now, from about I think the price around the time was about 87,000, and then went up significantly over a 3-week period to close at over 97,000. So I think with regards to rainfall and our price outlook for commodities in general, I think rainfall will be the biggest determinant, and whether or not they start they end early enough will determine whether or not prices would reset. Another issue that we might also consider, because we are also doing our crop production survey at the firm, and we are trying to evaluate the volume that will come into the market at harvest. Another issue that we would also be looking at is insecurity, and what we are trying to compare this year in comparison to last year is the number of hectareage that was cultivated this year. So if the insecurity issue has affected, we are going to see a lower number of hectareage, and of course by extension a lower production number in the market. But like I said, it is still early in the commodity season. We don't expect harvest until late October till early November. So it is still early to say whether or not there will be a price reset in the commodities market.
All right, Michael, thank you so much for that update. We'll be leaving Michael now, but we're still on AFEX to make business easier for mid-sized commercial farms. Stakeholders say there's need to shift perspectives from one that is entirely reliant on smallholder farmers' production to one that supports, both smallholders and commercial farmers. Smallholder farmers account for over 90% of domestic output in Nigeria, which, begs the question: what are mid-sized commercial farmers, such as the ones sponsored by the AFDB and FMARD, doing? Nigeria, a country grappling with, rising food prices, widespread poverty, requires assistance of mid-sized commercial farmers to scale up production. So we have Hemense Oka, the Vice President Commercials at AFEX, to share his the AFEX perspective. Good morning. Great to have you.
Good morning. Thank you for having me.
Yeah, so Nigeria's smallholder farmers are responsible for about 90% of domestic output in the country. How best can we, work things out in the agricultural space to include more mid-sized commercial farmers to scale up food production?
Definitely. So first of all, let me start by saying and expressing our gratitude to smallholder farmers for the work that they've done to bring us to this point. As you said, they're employing over 90% of the population. There's a lot of effort that they put into the work that they do, and a lot of reward that the country as a whole benefits from. But understandably, this is just not sustainable and just not enough for growth. We're not going to reach a point where we're going to be able to feed ourselves as a country and maybe even export and feed other nations if we don't invest more in farming and take it as not just a sustenance thing, but more as a business and grow. So it's important to include and start to locate smallholder farmers and move them, those that are able to, into the mid-sized to large commercial size bucket. So we're looking at 10 hectares and above, maybe all the way up to 100 hectares, just to keep it scalable and in order for us to actually have the desired effect that's going to come from being more focused on commercial farms.
So the public and private sector have roles to play in closing this wide gap. The wide gap on how smallholders farmers are producing more than mid-sized commercial farmers. And like we asked at the beginning, where are the mid-sized farmers? Could you identify policy directions and private sector roles that could help close these gaps, in a short period of time?
Definitely. So let's provide some context here, right? That these are very complex issues, and there's no one-size-fits-all model that's going to resolve everything. But more hands that are in and working together in collaboration, the more benefits that we're going to see. So from a policy angle, let's start with the government. There are probably about 4 different general areas in which that they can come in and intervene. It's either on the input side, on the actual output, on the technical angle, or finally in financing. So on inputs, that's one that we're all well aware of. That's providing seeds, fertilizer, but then also like allowing policy to bring those goods into the country, right? So either reduction of tariffs or free trade zones, anything that can just improve the inputs, the availability of inputs in the country is a first step from the government angle. Next is on the output side, right? So we've seen this year CBN enact a grain stabilization program. You can also do the reverse as well. So that's to keep prices down. The reverse is to increase prices, right? So you can provide price incentives for goods that are produced, which is only going to encourage more farmers to go into the production of that commodity. On the technical side, there's the provision of field extension agents that can work with farmers, give them best agri practice training. And then also, just generally speaking, infrastructure is incredibly important. So the provision of roads, access to water, electricity, all those are necessary if you want to create the environment that mid-sized to large commercial farms can operate in. And finally is the financing side, which we're all well aware of, right? So there's subsidies, there's loans, discounts on tariffs. All those are opportunities in which the government can intervene. And finally, there's on the private side, we have, in order for this to be sustainable, it has to be privatized, right? And there has to be some sort of incentive for anybody that goes into this production. And so there are lots of companies that are in this space and working to increase the amount of mid-sized farmers that are in this space.
All right. What are the challenges faced by the sector in trying to, foster collaboration among players, both in the value chain and chain and across other sectors?
Yeah, so collaboration is very, very important. There are companies that have been in this space for over 10 years actively, a lot longer actually, but in sort of like the modern era for over 10 years. And then the new companies are propping up. What happens is, unfortunately, a lot of us kind of remain in our own silos and sometimes even overlap, but not in a way that is productive and can be seen more as competition rather than collaboration. So I think there needs to be a change in mindsets. At AFEX, we talk about this word all the time, goal congruency, right? So even though we're in different teams and different areas, we're working together to achieve a common objective. And that's where we need to get to. So for the more established agricultural companies, they have years of experience, years of mistakes, years of losses, years of knowledge. They can share that with other up-and-coming agri companies that are interested in working with us. It's not going to be a free transfer of knowledge, but it doesn't mean it comes with a financial reward either. I think the trade-off for that would be in terms of collaboration and partnership. So how do we work together to bring about the change in a given area that we're looking for? So a lot of companies give loans in the same area to the same subset of farmers. That's not really helpful, right? So how do we work together and you bring your expertise, we'll bring our expertise, and hopefully that's just going to lead to greater food output down the line.
How can these mid-sized commercial farmers' activities help improve Nigeria's low productivity and price variations, which will in turn help the country's entire food system?
Yes, no, that's what this conversation is all about, and they're playing a key role in that, right? So as you said earlier, about 90% of the population is involved in agriculture, but yet they're not producing enough to feed us, our country. The reverse is the situation in a lot of Western nations, where you have 2 to 3% of their population directly working in agriculture, but yet they're able to feed their country and also even export to other countries. So Nigeria has a long way to go. By focusing on mid to large commercial farmers, we're going to actually see the increase in use of mechanization, which is going to improve the intensification of labor, provide greater efficiency. It's going to lower the cost of production because of the focus on one sector and one area. It's going to increase supply, obviously, so there'll be the availability of raw materials in a given area, and then that's also going to, because of the laws of supply and demand, reduce the cost of those goods in the market. And finally, it's also going to give the opportunity to provide FX for a nation that's desperately looking for it. And then let's not forget job creation. That's also going to come by a new skill set and new sets of expertise that's going to be needed. But yeah, it's important and it's critical for us if we're actually ever trying to truly achieve food security for the nation.
And I guess that's a suggestion of collaborating, getting a collaboration between the private and the public sector is also very key in this. But we have to stop the conversation here. Thank you so much for joining us, Mr. Hemense Oka, the Vice President Commercials of AFEX, for sharing your thoughts with us this morning. We'll just take a short break and we'll be right back. We head straight to the markets now. The equities is unfortunately still in the bearish run. There's ending the month in the red. Aniti.
Yes, good morning, Ini. Well, it's true, the last 2 days of August ended, unfortunately, in the red. But of course, it doesn't mean that the market is, all about losses. It's actually about profit taking from those who who made the investments. But before we talk about the bearish trend at the equities market, let's take a look at the fixed income market. First, the bonds market, it turned bearish a day after, we were recording some bullish sentiments, and that's because average yield, the average yield there expanded at the long and short end due to sell-off on the April 23rd as well as the March 2050 bonds, and then, of course, that's why that particular instrument there, it had about 6 deals and then total number of deals carried out there was 25. But when you take a look at the Treasury bills market, it recorded some. It was on a bullish note, and then the average yield there contracted by 15 basis points to 4.6%. Total number of deals carried out there was 29, valued at 52.8 billion naira. And of course, at the open market operations, not quite, just much activity, but not compared to what you had a day before that. And then, of course, for the central bank's special bills, the August 30th instrument, of course, that's way past. So the focus now is on the 29th of November 2021, later this year, which with a discount of 10%, it had 20 deals valued at 42.2 billion naira. So that's what's happened at the fixed income market as of yesterday. But we'll be having our fixed income analyst Chioma Odu to talk to us about what to expect in today's trading at that market. But now let's flip over to that market where you were talking about the equities market. We lost about 138 billion naira. That's in the last 2 days. So of course, sell pressure. That's it. So I think, yeah, let's talk to Chioma Odu if we have her there, so she can give us what to look out for at the fixed income markets. Thank you for joining us, Chioma.
Thank you for having me. Good morning.
Okay. Yeah, so it's I think it's more of a mixed bag for the fixed income market, bullish for the treasury bills, bearish for the bonds, and then of course for the open market operations. So what are we to expect today, first trading day of September?
Well, like you rightly said, at the short end of the call, it was a bullish bias all through. This was the result of the liquidity we got into the system. The money market was about 237 billion up yesterday, and then the normal instinct for investors is to try and reinvest at the short end of the curve. As a result of that, we saw rates trade at a range of 6 to 7% at the 1 year. And then, like you rightly mentioned, the OMO trading space, we didn't see a lot of activities there. The bonds market was quiet. What we basically saw was bookkeeping as a result of the month-end activities, and then we saw a bearish bias at that space. We expect this trend to continue today as the liquidity still persists in the market. So we are in the stage that there's still going to be some bullish bias at the short end of the yield curve.
Okay, so now besides all of that, do you see any likelihood of investors moving from the equities market further into the fixed income markets?
Well, I mean, for any investor without returns, and the returns on the yield curve at the short end is about 6%, and then the long end is about 12%. That's bond. It depends on the returns they are going to get. Well, we know that this is earnings season. Half-year results have been published, so there's going to be some attention to the equity side of investment. So it depends on the investors and what they want to achieve after returns.
Okay, so thank you for bringing us up to speed with the fixed income market, Chioma. That was Chioma Odu, fixed income trader at GT Bank. So back to the markets, like we were talking about there. The sectoral performance, not too good picture there. Negative across board. The industrial goods wasn't changed. Of course, the sell pressure from Zenith Bank, which also was the most actively traded stock as at yesterday, has been recording some declines in its price, in its share price. I think from last week, especially when it released its half-year result, which was quite impressive, of course. So, but like I said, it's all about profit taking and nothing to really worry about. So, but we'll keep our eyes open for what to expect for the market at the close of today's trading on the NGX.
All right, Anita. Well, as the month begins, we would also like to have a review of what August, I mean, like you noted at the beginning, the fact that it ended in the red doesn't mean that the whole month ended in the red. Was it more of a positive or negative, Anita? I know you follow these numbers very closely.
Well, of course, when you take a look at the month of August, which we will be reviewing in a couple of
during capital market on Saturday.
Yes, on capital market on Saturday.
Yes.
So we'll have one of our stock stockbroker to talk to us about it. But as far as the month is concerned, we printed about a 1.7% year-to-date return, which is on the positive side. But so far, year-to-date, we're at 2.6% minus. So, but of course, as far as the month is concerned, it was positive. But then we just continue to keep optimism high for the equities market, especially because the low price of some stocks is going to be more of an interest for some new investors to come into the equities market. And of course, you never can tell which direction the market might tilt to. Just has its
we're going to have about 30 minutes of that discussion on Saturday at 7 p.m. So please do join in for capital markets. We'll do a review of the market for the month and, of course, an outlook for September. That'll be 7 o'clock on Saturday, 7 p.m. on Saturday. Well, for now, we'll just take a break. When we come back, we'll head straight to London. Do stay with us. This is Business Morning on Channels Television. Welcome back, heading straight to London now, and we have Juliana joining us. Hello, Juliana. Good morning.
Good morning, Innie.
Great. So, in spite of our government gradual wind down of the stamp duty, which we've spoken to a couple of times, house prices continue to rise. Do we know why?
Gosh, there are a number of different factors, but you're right. The nationwide house price index is out, and it has revealed that yet again, house prices across the country are surging. The average cost of a home here in Britain is just shy of £249,000. I can't do that conversion into Naira, Nini, but it is a lot of money. And of course, this is for prices really outside of London. If you want to live in the capital, double the amount of money you are going to spend. One of the contributing factors is the stamp duty holiday. Yes, it did become less generous at the end of June, but it is still applicable if you're buying a property, if you're lucky to find a property in this country, between £125,000 and £250,000. Also, as well, the pandemic has made a lot of families reevaluate how they live and where they live. So a lot of people are using the pandemic to change their scenery and demand. There are less houses on the market than the demand is, looking at. There was one estate agent that said this time last July, on average, one estate agent would have about 27 properties to show to potential buyers. Today, it's 16 properties. So lots is happening in the housing market. It is still growing. Is the bubble about to burst? That's the big question people are going to be asking, and especially as now the furlough scheme is done.
Yeah. Well, we need to start preparing in case that bubble bursts. Well, September comes with the promise of more eco-friendly petrol. What's this about?
Yeah, this is part of the British government's drive to ban petrol and diesel, or the sale of new petrol and diesel cars by 2030. So today, if you are a car driver and your car is older than 2011, that's really important. So if your car's older than that, and I believe there are about 700,000 cars in Britain that are older than that, you can't put this E10 petrol in your car because it will ruin the engine. But yes, so E10 has 10% of ethanol, which is some sort of, it's a petrol device that is run by plants. Apparently in Brazil, that's how all cars are run. And Britain are doing this to be in line with other countries like France, Belgium, Germany that are already doing this. So far in this country, you were able to use E5 petrol, which is 5%. It's now been increased to E10, and it's available from today. Now, the government say that it will cut emissions by about 750,000 tonnes per year, which is the equivalent of taking about 350,000 cars off the road. So it's definitely a good thing. Are people going to buy it? That's the big question. I think the government are definitely going to have to incentivise the British public, considering E5 has been available. Not many people have been using it, but they are preparing the nation to get ready to be much cleaner and greener, Innie.
All right, we'll follow that story and see how many people will comply and getting to the target of having cleaner energy. Well, thank you so much, Juliana. We'll have more updates at 1:30 during Business Incorporated. So let's take a peep into the crypto market now. Ladi, the alts, are they still doing good?
Oh yes, the alts are still giving double-digit gains because Bitcoin is stable, quite stable, no volatility in Bitcoin price. So we have a couple of greens here. Ethereum doing pretty well this morning, and a couple of altcoins having double-digit gains. Look at the market cap. There's still above the $2 trillion mark, $2.09 trillion, up by 1.46%. 24-hour volume traded this morning, $126.02 billion, up by 18.46%. Bitcoin dominance waning down there at 42.54%. Yesterday it was about 43%. And now we have a price of Bitcoin, $47,322, up about 40 basis points there. 24-hour volume traded in Bitcoin this morning, $36 billion. Price of Ethereum looking really strong there at $3,500, up a big 8.65% this morning. Ethereum is looking very bullish today. 24-hour volume traded $29.19 billion in Ethereum. Top also market cap is all in the green there. Let's bring in Solomon Amunde now. Hello, Solomon.
Yeah, good morning, Ladi.
Good morning, Solomon. So I saw Solana had a really bullish month last month, and it went from about $67 to $128 high. Was this just about the Ignite announcement?
No, not really. Solana has actually been extremely undervalued. It's been accumulating below $30 for the past 3 months. Also, the price of Bitcoin really helped hold it down. But since Bitcoin has been trading sideways for a while, Solana has the opportunity to get it high. At the moment, it's still undervalued at $111. It's still actually undervalued.
Okay. And I see NFTs on Solana have also been, skyrocketing. You've seen some sold for about 300 sold, and over 10,000 NFTs sold on Solana's platform. What's the rush about?
Actually, it's an NFT season, and Solana has been building since February this year, and they have so many NFTs platforms, the NFT projects on the Solana ecosystem. Also, most persons are rushing to Solana ecosystem for the NFT craze. Why? Because the transaction fees are extremely low, and these NFTs have real intrinsic values because of the way the whole blockchain is being structured. So we will see more and more NFT projects on the Solana ecosystem, and the rush is actually quite crazy. It's actually sad that most part of Africa don't really know the Solana ecosystem, but it's actually a great one, and we would expect to see more volume there.
See, I have a couple of platforms like Cardano, Solana. Do you think they're a threat to Ethereum's dominance in the DeFi space?
Yeah, I 100% believe Solana is actually a big threat to Ethereum. That's why I say it's still undervalued, because I believe the price of Solana should hit at least $600 this year, which is about 6x from the current price. For Cardano, I feel Cardano would do well, but compared to Ethereum, I feel Ethereum will still outperform Cardano. It's Solana that seems to be the greater threat here.
Okay. All right, Solomon. Always great to talk to you. Thank you so much.
All right.
All right, top also market cap, we have BNB up 1.46%. It's $466, still below the $500 mark. Cardano looking really good too. $2.78 is up about 0.31%. But we have XRP there surging about 7% this morning at $1.20. And Dogecoin all still stuck around that 20-cent range, but it's up 2.15% this morning. And top 5 gainers, we have Kusama, $389. It's up at 22.22%. And we have OKB there and at $23.17. And Ravain has been moving. It was less than a cent just last month. It's now trading at 2 cents. It's up over 200% since last month. AR, $64.38, up 15%. And we have Aave there. Aave, $407, up 14.57%. So the altcoins are giving good gains this morning.
Great. Let them at least give Bitcoin a bit of competition.
Exactly. When Bitcoin starts to roar. You know how the market goes.
Well, let's have our time too as altcoins also.
Exactly.
Well, that is on the program. Thank you so much for being a part of it. Remember, at 1:30, we'll be back, Business Incorporated, to give you updates from the world of business. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.